Good afternoon, everyone. Phil Simons here with Columbia Grain and your Friday afternoon weekly grain market recap. Well, this week was noted with explosive price movement once again, primarily driven by the headlines over the war over in Russia and Ukraine. On Monday, we were greeted with a market open that gapped wheat higher, close to 50 cents on the day, primarily coming from the fact that Russia was potentially going to be removing themselves from the Safe Harbor Passage Agreement. I'm going to share my screen with you again here so you can take a look at the information that was given to us this week in terms of overall headlines. Once again, if we just navigate to columbiagrain.com, we'll be taken to our homepage here. And then if we go over to the right-hand side of the screen where we see Producer Solutions, we will see where we house all of our market information for your use as well. So again, to start the week, we did see the futures market rally on the back of news wires coming out with Russia and the Safe Harbor Passage. And really on Monday afternoon, the winter wheat conditions report was released in terms of the good to excellent ratings that they were coming up with this year with where we're at. And this did nothing but really stoke a bit of fuel to the fire on the close on Monday. Because on Monday, we do see that this week's the good to excellent rating for winter wheat conditions came out at 28%. Now, this is in comparison to last year with where we were at this time, which was at 45%. So again, on Tuesday, the market did react to the overall winter wheat condition ratings that we see here, and actually did close the day again on Tuesday with close to a 20-cent gain. But then on Wednesday, we did see where Russia did come back out and say that they were not going to be removing themselves from the Safe Harbor Passage Agreement. And it did basically take all the gains away that we saw on Monday and Tuesday, and closing that gap on the wheat chart that was created on Monday morning. So again, from a chart perspective, it was good to actually close that gap up. But again, the knee-jerk reactions that we are seeing from any headlines that are hitting the markets in terms of overall price movement or actual physical flow of wheat and primarily wheat are definitely impacting the overall price ranges that we're seeing. We're also seeing next Wednesday, November 9th, the USDA will have their monthly data dump in terms of supply and demand numbers, along with the crop production, which is going to definitely have directional momentum in the markets. And there were a handful of private analysts that released their thoughts on potential corn yield and bean yields and the overall production numbers that we'll see ahead of next week's report. So stay tuned for that. The other thing that was released today, or yesterday rather, was the Drought Monitor Index. So again, if we take a look at this, we continue to see some areas of Montana, northern Montana, and areas of the breadbasket that are definitely in drought conditions. But we do see over on the right-hand side of the screen here now that there is potential for some moisture to help alleviate some of those drought conditions up through Sunday at least. So again, something to stay tuned for, and the markets will definitely be reacting to any potential weather events that we see over the weekend on Sunday night when we reopen. The other important factor that was hitting the news wires this morning anyway was that China was noted as potentially easing some of their COVID restrictions that had kept somewhat of a cap on the bean demand as of late. But this news really did move the bean futures higher on the day. But again, for the week, we did have some significant price ranges. So let's take a look again where we see the weekly futures price action. We can see over on the left-hand side of the screen that Dees corn had a weekly range of 22 cents and closing the week out with a net loss of 15 cents week on week. If we look at January soybeans, they actually had a very massive range again for the week with a 68-cent range, and actually was able to hold on to a gain of 47 cents week on week. Turning the page and looking at the wheat complex, we can see that Kansas Dees had an overall weekly range of 66 cents and had a weekly change of a loss of 9 cents. Again, looking at Chicago wheat, Chicago Dees had a weekly range of 77 cents and was actually had closed the week out with a net loss of 37 cents on the week. And finally, looking at Minneapolis Dees had a weekly range of 60 cents but was able to actually lose 25 cents week on week when the dust settled here today. So again, just nothing but a prime example of the importance of getting your orders out there and working, because your orders will be working for you regardless of what you're doing. And if you're able to actually sit and look at what the cash markets are doing on a tick by tick basis. So that is the importance of getting your orders out there and working. I do want to highlight just real quick again, Chicago wheat futures and the ranges that we have been seeing this year compared to where we were seeing last year. So again, this is kind of a busy chart, but this blue line here will represent what the weekly price ranges were back in 2021. You can see that the average weekly range was close to 25 to 30 cents. And when we look at the actual the price ranges that we're seeing so far this year, 2022, we can see that the weekly price ranges are closer to 80 to 85 cents that we're seeing. So these knee-jerk reactions are providing us some really good opportunities in terms of pricing, but we do need to take advantage of them while they're here, because they won't last forever. So again, just something just to point out, you know, the overall price ranges that we are seeing are definitely magnified by what we're seeing in terms of the war over in Russia and Ukraine. So again, just a prime example of the importance of getting your orders out there and working. Get a hold of your local Columbia Grain merchandiser to make sure that you do have those out there and working for you. And take a look at some 23 and 24 crops as well, because these opportunities are extending the curve to a certain degree as well. The other thing that I do want to bring up is in the coming future, in the near future, take a look and see what we're going to be having in terms of our app, our mobile application, because we will be releasing some very exciting information here, hopefully within the next week. So please stay tuned on that. We'll get that information out to you as quickly as we can. Remember, everyone has a trading strategy that won't work. Have a great weekend, everybody, and we'll talk with you next week.